BKD to help me in welcoming them.
I've had quite a few of you in previous presentations debated outside. A few of you I had the pleasure of interviewing today, so thank you for your time. My name is Rob McCoy. I'm an audit partner with the firm of BKD. Out of curiosity, how many people have heard of BKD before I just said that? Good. It used to be about half the crowd, so we're making progress in our marketing. So, Alan asked me to talk about different consulting that CPA firms and CPAs do. So I kind of sit down and thought it would be an easy project. Let's go to our website and I'll just kind of outline stuff. I did this week. It's kind of challenging myself, kind of a logical flow. So I hope this flows logically. But we're going to talk about the three different buckets of public accounting. Kind of start at the high level, kind of drill down. And I kind of put it into test, tax, and then consulting and other. And just for visual display, you notice I made each three boxes touch because there's stuff that is tax related that relates to consulting. The example is helping a client work with what's called cost segregation. You build a building, you've got to pull out some of those costs and depreciate it as equipment versus a 30-year building. So is that consulting or is that tax? It's kind of a gray area. So I did that on purpose because a lot of things in public accounting don't operate in a silo. You have to look, kind of like a doctor looks at your whole health. As a good CPA, you have to look at the client's whole health and how you can help them, because you may do one thing that helps that hurts something else. So you have to keep everything in mind when you're working with clients. Before we go into the presentation, I have to do a little advertisement. The reason we're out here, we like to recruit from UNC, so I'll give you a little information about BKD. We have a book that I'm going to pass around. We do need these back. This is a values that we installed in our new hires day one. And we've had these books for about a decade or more. I never brought them up to UNC before. Our new employees get this day one. So we put our pride values and our ethics in a really nice book. And really puts tangible items, little simple stuff like thou shalt return phone calls in 24 hours. You shall make sure your out of office reply is on in your email. We have funny phrases in there, talk about put the moose on the table. Comes out of our Little Rock office, and they have a phrase down there, if you have a problem, don't sit there and look at it, put the moose on the table and take care of it. So it's kind of an interesting book. I use it a lot on sales calls. I thought, well, what the heck, I'll just pass it out. So we'll pass it around, we'll give you my presentation. Feel free to ask questions. But a little bit more about the firm. There's kind of our MAT service is integrity first, true expertise, professional demeanor, responsible reliability, and principal innovation. That's what the Pride book talks about. So go ahead to the next slide.
So you forgot about eat your frog.
Oh, eat your frog, one of the other phrases people use. Eat your frog is not afraid to be miserable, eat it, get it over with, and if you have issues, and you will sometime in your career have a nasty situation you have to take care of. A client got to make an estimated tax payment, a client accounted for something wrong, they have a material weakness, in their internal controls, a big adjustment, they got to follow debt covenants. Those are real life examples that I've had to deal with, and it's not fun to go have those meetings with clients, but you have to eat your frog and go have that conversation. So, a little bit about the firm, one of the largest CPA firms in the country. We have about 2,100. I think today, actually, maybe go to 22. As of today, we merged into 2 new offices, one in Pennsylvania, one in Erie, and one in Pittsburgh. So I'm not sure our webpage was up to date, but I checked the numbers yesterday. We have 3 subsidiaries we'll talk about a little bit today: corporate finance, wealth advisors, and insurance. We have clients in all 50 states and international, and the firm about 420 million, 418 million in revenue, so annual revenue. We're located, the page, brand new slide we just got sent out to us last week with the new Pennsylvania offices. So you can see Colorado as far west as we go at this point. Our traditional offices, when I joined the firm, we had 11 offices in Kansas, Missouri, Arkansas, Oklahoma, with the offices when I first joined. So we've grown a lot in 23 years. I know I don't look that old. 23 years I've been with the firm. Next. Our international alliance is called Praxity. There are 8 firms in the U.S. that are part of Praxity, and some very large ones internationally. In the U.S., there's kind of 4 large firms and 4 smaller firms. So if you're from the West Coast, you've probably heard of Moss Adams. They're part of Praxity. Up in the Great Lakes region, Plant Moran. Coming southeast is Dixon Hughes Gordon. I think now is the official name, so just Dixon Hughes. And then there's Mazars Weiser in New York, Kaufman down in Florida, and Son in Boston. I'm getting one right now. It's like 4 large ones, 4 small ones. I'm missing one of the small ones. With those, and then internationally, Mazars over in Europe. So we have, I'm not going to lie to you, we do not have the breadth of services international that a Big Four would have. We're more on line with some other firms, more like maybe McGladrey Grant. I've had clients, public clients, that have had 40% of the work up in Canada, and a large firm in Canada called MNP, Miners, Norris, Penny. We use up there. They do the work, I go review it. Through a Practical Alliance, we compete with each other, but we also work with each other. Kind of a usual alliance, and we use it more and more as our clients grow. Our mission really has three legs to it. One is to provide career opportunities for our employees. Number 2 is to provide good service to our clients. And 3 is to keep our financial house in order. A few of us in the room remember a firm called Ladenthal and Horwath that went under because of lawsuits. It was the 9th largest firm in the country at the time. That's when we came out with our mission. BKD is debt-free, somewhat conservative firm. We turn down clients some other firms take on. That's just our business model. If a client has a chance to be a going concern opinion in our audit, we will not do the work unless it's an existing client. We'll stick with them. If they're going to be a new client, we won't. We're very conservative on banks. Banks get rated by the regulators and certain ratings. We will not do their audits. So we're kind of a conservative firm. Sometimes that stunts growth, but also it keeps our litigation costs very low. And if those of you who watch the news, there was a big litigation case settled 2 days ago for $36 million on a city fraud, on a fraud related to a city. Dixon, Illinois. It's a very interesting case. I think we're here presented on it some today in one of the classes, but there's a lot of stuff on the web if you go read that, some documents and stuff. It's very interesting. So I apologize, I did not introduce my counterpart to be doing part of the presentation. Randy Gambrell works in our forensics area. Something that every student wants to work in. Forensics is cool, it's CSI type stuff. He gave a presentation today at one of Professor Reed's classes, and we'll give kind of a skinny down version of some of the cool stuff we do with technology and fraud type environments. We do overlap some of that in some of our audits. We'll use fraud type procedures, kind of an unpredictability part of our audits. So,
Our auditors want to look cool too.
yeah, we try to look cool. We can't. So, first bucket we'll talk about is what I call auditing and test services. And it kind of lists the audit, the review, testing internal controls, the procedures, peer reviews, and forecasts and let's just say projections. I did this late last night, I apologize. With opinions, meaning you opine if those projections are reasonable. And what's one thing that's unique about this list? Can anybody tell me? Besides my spelling mistake, put projects and projections down at the bottom. These are the only services that only CPAs can do. But yet, a lot of times, this is what we bid against each other on and take lower rates on, which doesn't make a lot of sense as a profession. We kill ourselves sometimes. Is many times clients view an audit as a commodity, and we'll get the consulting work and make better fees. But there's great organizations out there who are non-CPAs who can do consulting work. McKinsey, we've got a couple other names out there. Protiviti, there's other consulting firms that can do a lot of what we can do. They can't do this because we are licensed CPAs. In most states, only CPAs can own a CPA firm. We have non-CPAs who are like partners in our firm, technically, legally, the principals. Because only CPAs can be an owner of BKD. And most national firms that way. We do have consultants who are treated like a partner, but their business card will not say partner, and on their financial statements, if they have an equity, they have debt to the firm. So as a profession, these are the ones I came up with that only CPAs can do. So it's very important to remember this is a bread and butter, in my opinion, because supply demand. We're the only profession with a license that the test you have to take in a couple of years allows you to do this. And please, interactive questions that go along, and I'll have Rand actually hand out some flyers from our marketing department, just different services we provide. Pass them around. If there's any questions, I'll try to answer some of them. Does everybody know what peer reviews are? I love work. I do a couple peer reviews. Does anybody know what a peer review is?
just what it implies. It's someone who is at your level that's looking over your work and pointing out the good spots and pointing out the bad spots and offering recommendations for all the others.
Yeah. It started in the 70s. It's voluntary in most states to start off with, where Clifton Larson Allen does our peer review every 3 years. If we bid on anybody who has single audit type work, we have to give them a copy of our peer review. So most firms of any size have a peer review. I get to work on McGladrys and Grant Thornton's peer review. Our firm does theirs. It's kind of neat. I'm going to Boston in a couple weeks. I've been in Irvine. This is the year we do McGladrys. So it's really challenging, very intellectually stimulating, because you're dealing with their top quality control people. And we tend to send what we call A&A directors and national people. It's really fun work to do, in my opinion. But our profession self-regulates a little bit. Like, I'm thinking back a little bit when the PCOB came in. PCOB does the same thing. Supposedly, you read the PCOB report, it says like UI has a 42% failure. I don't believe that. I think in most cases, what they call a failure is different than what a true failure would be. It's almost always a documentation type issue. But they have forced us as a profession to increase our standards of documentation and stuff. And there are different standards for public work versus non-public work. Any other questions on what these services are? Let's go ahead and go to the next slide. We kind of talked about, I guess, most of these. Only CPA can do these, between risk commodities, unfortunately, as a profession. There are standard setters out there. The AICPA, the American Institute of Certified Public Accountants, are the ones who set the rules that we have to follow to audit companies, unless they're public companies, or private companies. That's the self-regulation we have as an industry. I think that's very important, because what we sell, I put at the bottom, is our profession. We don't sell tax, audit, consulting. We sell integrity, in my mind. And if we screw that up, like our profession almost did with Enron and stuff 8 years ago, our value of our profession as CPA value goes down. It did for a while. Now I think if you look at surveys, CPAs are held very high esteem up there with the doctors and well above the lawyers that we all make fun of. So for a while we were below lawyers after Enron, which was kind of embarrassing. Regulations, you have PCOB for public companies and also state laws. For example, many states now require that if you do a review or audit, you have to have a peer review report. New York did not have that when Madoff had his court audits. To some firm that never did much, issued an audit report. No one ever checked the auditor, no one ever audited the auditor, if you will. And now in New York, you have to have a peer review to do auditor reviews in that state. So there are some state laws that come into play that start regulating our profession. Tax services, some obvious ones in there: preparation of federal income state tax returns. As I tell tax people, I just do a little number of boxes. It's not that hard. They don't believe me when I say that. It is very difficult. It's not as easy as it looks. I'm making fun of our tax people. But similar to audits, CPAs can do, you have to be a licensed CPA in order to represent a client in front of the IRS. There are two other groups of people that can. One is attorneys, and the other one is enrolled agents. Enrolled agents, you take a test, and then you get, the IRS basically, instead of a CPA test, has a special test you can take, and I'm not an expert in that area, but just those are the three type of credentials you have to do in order to do tax return. Now, a lot of times your employer will have it, so if you go work for H&R Block has that. You, an individual, may or may not have to, depending on how it's reviewed and stuff like that, may or may not have to have that certificate. As our interns and first-year staff people that are not like the CPAs yet, they still work on a tax return because it's reviewed by a CPA. So after test work, the next bucket, which is somewhat regulated, is tax, but we have to share that marketplace with other people, the attorneys and the enrolled agents. Consulting, I've got 4 buckets. And for the most part, I don't think any of these 4 buckets you have to have any kind of credentials to do. So we're competing against the entire workforce, if you will, to provide these types of services. But because businesses respect the knowledge and the experience that CPAs have, there is a lot of work we can do in these consulting areas. Let's go talk about accounting first. These are Rob McCoy's categories, by the way. I had to come up with these this weekend. I put this together. A lot of companies want assistance with accounting for transactions. A lot of public companies now have 2 relationships. They have a relationship with their auditor, And previous Sarbanes-Oxley, so they can go to the auditor and say, I need help to account for my deferred comp plan for my executives, help me do it. Now, because of independence rules being more strict on public companies, a lot of public companies have a second CPA firm that they consult with to do the accounting so the auditors can audit. Accounting is different than auditing. Accounting is get a number, the auditor comes in and checks that number and documentation to see if it's right. So a lot of firms have a relationship with two CPA firms now because of independence issues. A lot of times clients, public and private, have one-time events, acquisition accounting. They've been through acquisition and purchase accounting and advanced purchase accounting, consolidation and stuff. It's not easy. Rand gets involved a lot in this because if you spend $50 million in acquisition or accounting, you have to figure out what you bought. Was it 25 million of inventory, 10 million of receivables, tangibles, trade names? A lot of valuation work comes into play here. So we get into the consulting, and Rand works in our consulting group, and one of the partners he works with, she's our national leader in valuation. All she does is valuation work, for values and tangibles. Very little of her work is for our clients. She works for other CPA firms because even on a private client, we can't value an intangible and we go audit it. So let alone public companies, so a lot of her referrals come from other practice firms, from Grant Thornton, from Big Four, and then when we have a client that is an acquisition, if they don't have the internal expertise to value trade names and customer lists, they have to go to a different CPA firm and do that. Or they try to do it internally. Some clients are sophisticated enough to try to do it internally. We have her review their work because I'm not a valuation expert, she is. So that's one area that's very common in public accounting is evaluation work. The next one is general business advisor. So many of my clients are for-profit clients. One I love to talk about because students love this. Who's ever had a Bud Light? Or excuse me, Coors Light? The can turns blue because it's cold. My client has pink that Coors buys to make the can turn blue. It's really cool. A little company down in Colorado Springs. He's a small business owner. He doesn't interact with other business owners every day. So I go meet with him. He'll ask questions like, is my employee benefit plan package reasonable compared to what you see in the industry? Is he a unique industry, or he doesn't see, he's not like a hospital where they have like trade associations. He makes ink for marketing and other purposes. There's not thousands of those type of companies. So he likes to benchmark himself against businesses that we deal with, same size. So he'll ask me those type of questions. I have to maintain confidentiality. I can say, you know, what we normally see on a 401k, typical plan is you match dollar for dollar up to 3%, and some don't match above that, some match 50% up to the clients or the employees 5%. That's the advice he's looking for, because he has no idea. He probably has one employee saying, everybody else puts 10% into 401k, you should be doing that. And he doesn't know, he's an owner, doesn't know that's right or wrong. So a lot of owners, particularly small non-public companies, you know, the ones that have 20 to 200 employees, really look for the CPA just to be a sounding board. And that's fun to do. I enjoy doing that type of work. Most of them, you have to have a little gray hair and a lot of experience in order to provide that information and know what is reasonable. Compliance with regulations. A lot of times, companies will do special projects, especially in the healthcare area. Now, special record retention, billing issues. There's a lot of regulations they have to deal with. We have actually people in BKD who are not CPAs, who are actually nurses. And they consult with our hospital people on how to do coding and billing properly so not committing Medicare and Medicaid fraud. Healthcare is one of our firm's biggest industries. So we have people, and not just BKD, other firms. The Big Four have great consulting and Gladdery and Grant firms like that who help companies get ISO 9000 certified, which is a quality control process in manufacturing. We have a couple of engineers around the firm that do that as well. Sometimes you can do that for your clients, sometimes you get independence issues, and you just have to address those. So these are some of the accounting type consulting we deal with. Last one I have down there is loan review. A lot of community banks, regional banks, need to make sure they're documenting the loan file what the OCC requires, and they'll outsource that to a CPA to come in and check to make sure they're compliant with what they have to have in a loan file, which has changed a lot with the new regulation after the mortgage crisis we have. So a lot of times they'll outsource that to a CPA firm. Go to the next one.
Can I interject?
Yeah.
Real quickly, and actually Rob touched on it at the beginning, and feel free to disagree with me, but since I started in public accounting, one of, I think, kind of the big trends in financial reporting in general is a movement from historical cost accounting to fair value accounting. Fair value accounting is more of a market-based way of looking at things. And from my perspective, to the user of a financial statement is much more relevant information to them frequently. But that is also much more nebulous than historical cost. So you have areas that are really can be subjective in nature, that there's a bigger and bigger push to using more of that type of that accounting and that type of measurement in it. So if you're looking forward in your careers as accountants, I think something that is really going to be more and more significant to you is the use of fair value measurements in financial reporting. So just something to think about.
A great example, believe it or not, when I started in public accounting, if you were not a financial institution or a nonprofit, for some reason you were just a manufacturer that you own, corporate stock, IBM stock, IBM, or something like that, you carried it at cost. You couldn't market to market. You carried it for tax basis, so that if you may have an asset on your books for $400, it's easily determinable. It's worth $40,000. You know, your great grandfather started a company, bought a share of Berkshire Hathaway, but back in the late 80s, early 90s, unless you were a nonprofit or a bank, you still carry that historical cost. So profession's come a long way. It's much more useful information. Right now, but the only thing that's historical cost on a financial statement, fixed assets, obviously, historical cost and depreciating. Sometimes intangibles you set up and amortize, but it has a set life. But that amortization probably approximates its useful value as well. So if you have a trademark that has a 15-year life, you may amortize a straight line for 15 years. That's probably pretty close to its fair value as well. So Rand's absolutely right. Being an accountant or being an auditor, valuation work is more and more important in public accounting, financial reporting. Internal control consulting. This grew a lot post Sarbanes-Oxley. Even public companies probably didn't have great documented controls 15, 20 years ago, 30 years ago. It's improved a lot. So CPAs, a lot of times, once again, a lot of times for non-audit clients because of independence issues, they'll hire another CPA to help them design the controls, how to document. They don't have a strong internal audit department. They'll outsource the testing to another CPA firm, have them test it before the auditors come in and test it. This is both for SOX and non-public companies. More and more, I've had some governmental clients in large cities who come to me and say, we think we need to improve our control documentation. Can you help us with that? It's something you didn't see 15, 20 years ago. As I mentioned, a lot of times this involves working with the internal audit department. Sometimes the external auditor, you can work with the internal auditor and still maintain independence. I'm a partner on the Colorado State University audit, and I worked in my predecessor, we've had it now for 5 years, starting on 6th year, and I'm my first year on it. First thing I did when I became partner on it, I went and talked to the internal audit to say, can we leverage each other to be more efficient? I didn't want to issue an audit report and not have a finding, and you do an internal audit report 6 months later and have a finding or vice versa. We ought to make sure we coordinate the processes. But that's kind of the SEC mentality, is external auditor really working with the internal auditor and using some of their expertise but still doing their own work. Tax consulting, now we get a little more fun stuff in my opinion. On the corporate side, you get to pick which type of entity. I heard someone over here talking earlier, it sounds like maybe with tax classes you had this assignment we have a hypothetical company, should be an LLC, S Corp, C Corp, what state is you registered in. That's real life experience. That's what we deal with a lot of times. And there's a new tax law changing where I've seen very few S Corps in the last 10 years formed. And because some of the tax law, they formed LLCs. Because some passive rules are active and offsetting gains, we think we'll start seeing more S Corps instead of LLCs because there's some changes in tax law. And I won't go into detail because I'm just relying on my tax people helping me out with that. I'm an auditor. State and local taxes, big area there. As local government become more sophisticated, there's more challenging issues when it comes to sales tax reporting, to when you have nexus in a state. So if I have a manufacturing company here in Greeley, and almost always people just come pick up stuff, but I do have a delivery truck and I deliver stuff to Cheyenne. At what point do I start filing taxes in the state of Wyoming? Do I have a next, what's called nexus or a business in Wyoming by delivering it there? Some states have what they call the minimus type activity. They won't tax. They may not come after you, but at some point they will come after you if they know you're delivering stuff in the state. And with technology, they're getting better and better at that. Obviously, we all hear about the internet sales is a big issue out there right now. R&D into other tax credits. So use that tax class. There's a lot of credits out there. Most small companies may not be aware of those, so they rely on their CPA or hire a CPA to help them do studies or documentation, whatever they need to get some tax credits and other tax advantages. Who knows what transfer pricing is? Anybody? I'll give you an example. If I'm an Apple computer and I sell you the iPhone, what country did I make that money in? It's probably put together, a lot of the sub parts are manufactured overseas. It's probably assembled in the US and sold in Colorado. Probably put together maybe in California. I don't know, I was using Apple as an example. Now you do a tax return, where do you report that? Well, let's say you made $100. Well, how much of that was made in process in the US and how much was made overseas? What transfer pricing studies do is being proactive, instead of having servers come in, going proactive and do a analysis saying, Apple, you made $100 when you sold that phone, $45 was made in the manufacturing process and has to be taxed over in Singapore or wherever, $55 was made in the United States because you have efforts and stuff. Therefore, the intercompany sale, the overseas operation is going to make $45 of income and the U.S. is going to make $55. That's the transfer pricing. It's really interesting. There's certain, how they do that, they look at other examples. As simple as I have clients where all the management people in the U.S. and they they charge a management fee to Canada. Because yeah, they can manipulate their income tax by like, wow, we make a lot of money in Canada this year, let's charge a huge management fee and they'll cover all the executive salaries this year. But under audit, the IRS or the Canadian authorities will come in and say, no, you have to have a documentation of the best efforts, how you allocate that. And that's what transfer pricing is. We actually have a senior manager down in our office who we hired away from KPMG. That's all he does is transfer pricing. It's niche, very narrow niche. There's probably a dozen or so people in Denver who spend 100% of the time in transfer pricing. Some other tax people will touch it occasionally. But the more you do it, the more of an expert you are. You probably have 5 around the entire firm. All they do is transfer pricing. So it's kind of neat stuff, and it makes sense if you think about it, is wow, you can manipulate taxes by charging overhead and where the profit's made, not only within states, but also within states using a free portion of appropriation that the U.S., all the states have agreed to. So more transfer pricing is more over national borders. But also what can happen, I've had a client that has a not-for-profit entity does charitable work, but has a for-profit subsidiary. And they have common management. How do you allocate it between the nonprofit and for-profit? I'd obviously love to take all the management fees and charge it to the for-profit. Probably not allowable in the tax code. You have to have some kind of documentation and logic how you allocate that. So it's kind of neat work when we talk about transfer pricing.
And it becomes really significant because in Bob's example, and I don't know what the tax rate in Singapore is, but what if Singapore has a 75% corporate tax rate? In the U.S., you say across the company we have a 35% tax rate. To the extent you can without committing fraud, you want to shift as much income as you can into the country with the lower tax rates, and that's part of what they're helping accomplish.
Yeah. You have to have ethical people because there is a fine line between planning and fraud and you get this type of areas. And that's we will not help clients. We'll fire clients if they want us to say, well, I want all the income this way, and if the facts don't support it, we'll find that client. Most respectable CPA will as well, because what happened is then that ever gets audited, it's a fairly knit, small group of people, like I mentioned, and servers will start watching, the credibility of firm X will go down, and all of a sudden under audit, a lot of them start failing. transfer pricing is becoming more and more of an issue. Sometimes clients just do it themselves, and the IRS comes in and blows holes through their logic. You really need a professional to make sure it's documented and have the logic behind it. Tax consulting at the individual level. Some of these services need to be licensed. If you're a CPA and your neighbor comes and asks you for tax advice, can you tell them to go buy individual stocks? Yes or no? Who says yes? Who says no? Who's awake? The answer is no. And the way we interpret it, there's special licensing to be a stockbroker. As a CPA, you are not a stockbroker. If a client asks you, what should my mix be? You probably qualify as a CPA saying, you know, at your age, you should be 80% equities and 20% bonds. That's probably okay. When you start saying individual stocks and mutual funds, you're probably crossing the line. I think this is called a Series 7 license you have to have that people like at Schwab and used to be A.D. Edwards, Wells Fargo Advisors, they all have to be licensed. The CPAs, sometimes you see, especially tax accountants, start crossing that line where they're giving advice they're not licensed to do. So what a lot of firms have, and we actually have a separate subsidiary, that's a BKD, BKD Wealth Management subsidiary that we have. That's what they do. We have about $2.5 billion under management, and there are no traditional CPAs in that. They are licensed investment advisors. But what was happening, so many of our high net worth tax clients, because hopefully we're doing good service, thought of us, BKD, as the most trusted advisor. They kept on asking those questions. And so it's putting people in jeopardy for their own license and their own liability. So 20 years ago, we, BKD, set up a subsidiary, and a lot of other firms have the same type of subsidiary. Sometimes it hurts us because we compete against what would normally be referral sources. So it is kind of an interesting subsidiary we have. We physically don't have anybody in Colorado at this point. We are serviced out of our Kansas City and Springfield, Missouri offices. We come out every quarter, every couple of months to visit for clients we have out here. So some smaller firms, a big portion of their business, GHP in Denver has, I think, $1 billion under management just in Denver, in Colorado alone. They're a big part of Steve Levy, is a managing partner over there. A big part of their practice is investment advisory. It is set up as a legal entity just like we have as well. Estate tax planning, obviously. High net worth individuals make great clients. You can avoid, and legally avoid, a lot of estate tax by doing proper planning, so a lot of our tax people work on that. 529 plans, it comes to education funding, charitable gift planning. So a high net worth individual may want to leave a legacy, some nonprofit passion that he or she may have, and what's the best way to structure that from a tax planning standpoint. We'll help them with that. Retirement planning, and BKD, some other firms actually we have a licensed legal insurance company. If a client needs to buy life insurance, instead of going to a broker, we actually have a subsidiary that actually had no employees in it. We just outsource it to consultants, and we're not dealing with the $100,000 term life insurance. We're dealing with $1 million plus policies, so it's not a big part of our business. But once again, we had so many clients who thought we or other CPA firms do the same thing. The CPA becomes the most trusted advisor. They want to help you evaluate insurance. Are you really qualified to do that? It's better if you can provide a person to help with that. We have a licensed insurance subsidiary that we do sell insurance through these independent brokers. So now, I use BKD a lot in this example. I try not to. I give examples of what I know some other firms in Colorado do, because as I talk about every year, I come give a presentation on what's the best CPA firm to work for. I start off by saying it's not BKD for everybody. Big Four are great firms, local firms are great. You have to know the type of firm you want to go to work for and what you want to do. Semple & Bailey, ACM, Anderson & Whitney here in town are all great firms. Big Four are great firms, except for Deloitte. A couple people go in there and pick up BKD. They're actually good people. I really have a passion to make sure students end up in the type of firm that they're going to be most successful. So understand the different services that you may want to do and what kind of clients you want to work with should depend on what kind of firm you're going to work for. So I'm not trying to make this a BKD advertisement. I'm trying to talk about what CPA firms do. In many cases, the size of the firm we are, we do most of these. Other consulting, merger and sales. A great example where sometimes CPAs kind of cross the line a little bit. You have a family-owned business, he wants to sell, I think, in my opinion, and our firm's opinion, you can consult with them, look at deals. And once you start marketing that, you become a broker-dealer. There are special licenses for broker-dealer. We have BKD Corporate Finance for that very reason. The president is actually now based in Denver. A senior VP just got promoted to president a couple months ago. And we actually go sell companies, just like Goldman Sachs goes and sells companies. Different size transactions. Our normal size is between $5 and probably $30 to $40 million. $5 million to maybe $50 million, and then some up to $200 million transactions. We're glad the Big Four all have these subsidiaries as well. What's unique is we can't go market a client we do an audit for, because at that point you're not independent. So if we actually walk away from audit sometimes, because from a business standpoint, it's better to be the broker and help sell a company than to be the auditor at some point. At other points, we tell our business broker, sorry, the client wants us to continue to do the audit because it may not sell, and we have to refer to another either business broker or a business broker within a CPA firm. So that's why I like meeting with other CPAs, because sometimes we have to refer work back. And talk about independence issues. Employee benefit plan administration. Most firms, were more involved in this probably 20, 30 years ago. As technology became more expensive, it's really gone to the fidelity principles of the technology to do, everyone do online, 401k changes, that kind of stuff. When I first started the firm, we actually did 401k for people, but you can only change your investment election like once a year. Now, if those of you maybe worked in the private sector and actually had a 401k, you log in, you can change at any time. The cost of that infrastructure is so high that a lot of firms have got out of it. But BKD and some other firms will do administration for high net. They'll have a special compensation package for C-level employees that is allowable under ERISA. You may involve 5 or 6 people and they're not making investment options as a cash balance plan or something. We have some offices that still do that, and other firms do as well. Lease audits. We've done a few of these, but some other firms actually specialize in this. If you are a company and you lease a building and you agree to pay $20 a square foot, how often does somebody actually go measure how many square feet you actually have? You'd be surprised how often they're wrong. You're supposed to pay your percentage of CAM charges, which is common area maintenance. So if the building owner spends $5,000 a year getting the yard mowed and you're supposed to pay 20% of it, you should pay $1,000. You may pay $1,000, someone goes in and does a lease audit, and find out they only spent $3,000, you should only pay 20% of $3,000, not $5,000. So there are some CPA firms that can do lease audits. Consulting firms can do that. You don't have to be a CPA, but because the project management of CPA firms, the skill set you learn in audit or tax, we can do it more efficiently. And if it has a CPA name behind it, sometimes it has a little more credibility. Some leases will actually say, if you are going to audit this lease, it must be done by a CPA. I've seen that in leases. So they're trying to keep the ambulance chasing type organization out of there. But big real estate owners realize that this is a valid concern that tenants have, and people do lease audits. I actually did this for a while, so we reverse sales and use tax. I thought it was really cool. I did it back when I was in our Kansas City office. When you buy equipment, you get, or anything, for the most part, you get to pay sales and use tax on it. Most states provide an exemption if you buy manufacturing equipment. Most states provide an exemption if it is a raw product going into a finished good. Only the end user pays sales tax in the United States. In Europe, it's stuff only the end user pays sales tax. So we go into a factory. Let's say one real life example, a dairy, and they sell milk. What gets sold? Obviously you get the milk, but you also have the carton, the label that goes on it, the glue that attaches the label to the carton. You'd be surprised sometimes companies don't realize they're paying sales tax on that. It's pennies on the dollar, but when you have a multi-billion-dollar company, it adds up. You lease equipment versus buy it. Different states allow exemptions on manufacturing for the leases. Some do, some don't. We'd go in and try to find where they paid sales tax and didn't. Biggest example I worked with, the company even knew they were doing it wrong and paying too much and didn't have the manpower to go fix it. We saved them about $300,000. No, our fee was about $300,000. We did a contingent, about $1.3 million we saved them, which is actually small peanuts to this big corporation. But because it wasn't an audit client, we could do it in a contingent. fee, so we got 25% of what we found. We had like $250,000 fee, and all of a sudden partners around the firm go, wow, it's got a neat service. We're going to do that for in other places. So we have a few people around the firm who do that. Colorado's not a great state to do that in because what's unique about Colorado on sales tax is if you collect sales tax, you pay the city of Greeley directly, you pay any other districts directly, and you pay the state their share. Most states, you pay the state then turn around and pays all the jurisdictions. So to get refunds, pretty easy. You just have to refund, send the documentation to the state sends a refund, and then withholds that to different tax organizations the next month they remit taxes. It's not quite that simple, but it's much more convenient. Colorado has what's called home rule, I believe it's terminology, where you pay every jurisdiction separately. So it's very inefficient in the case of these reverse sales tax auditors in Colorado. It's kind of fun work. It's fun instead of going out and being the auditor and telling a client they got to book extra benefit accrual because they calculated it wrong. It's funny to tell a client, by the way, we've got you $250,000 and so you get a check in about a week. That's a lot more fun consulting work. So now getting the exciting stuff, data mining and analysis. We use ACL. I think you teach IDEA. You're using very similar software.
ACL is actually what they're doing.
ACL now? Yeah, I think so. And I am not trained. I've played with both a little bit. But if you're in college, learn how to use that. Almost every firm now requires new hires to learn that ACL or IDEA, the two main softwares out there. We use that on regular audits. We also use it in forensics, evaluation, as Rand talked about. Expert witness, so kind of tying valuation to expert witness. High net worth couple gets divorced, they have a family-owned business, how much is it worth? They'll hire a CPA a lot of times to come in and value the business. We had a partner who now retired who specialized in evaluating assets in divorce type situations. He had all the attorneys in town, a lot of the attorneys who were divorce attorneys. He was their expert witness all the time. I mentioned healthcare, coding and billing before, and I kind of mentioned the ISO certification. So these are some of the other consulting services that CPA firms can provide. In many cases, these can be done by non-CPAs. But I think because our profession has a good reputation and understand project management, a lot of times CPA firms will do this type of work. Any questions? Yeah.
How do you kind of transition from, most of us are going to go into an audit or a tax field. So how do you transition to these other things, to the consulting?
I think a lot of it comes with experience. My advice to most people is spend at least 2 years in audit. In audit, I used to call it the real life MBA, and I still do. You learn how businesses work and function. And at some point in that 2 years, you may say, maybe to work on a special project. A lot of firms pull auditors off during some time of year to help with a special project. You may show interest in it. You may go get a special certification. For example, if you want to be a business broker and want to help buy and sell businesses, you may work to get a license to do that and work in that subsidiary. So I think everybody ends there in a different way. There are people who will hire straight out of college for some of our consulting type areas, but most people are experienced in some sort of accounting or business management type position before they go into consulting. I think the Big Four, I would say, are probably very common to that. There are some people that may hire straight into consulting, like actuaries and stuff, obviously, but a typical undergrad or even a master's in accounting, I think most are going to spend a year or two in audit or tax and gradually go into it. And sometimes you may do it to complement your audit work. For example, the healthcare coding and billing. We have a healthcare partner who is not a partner, who still consults with and helps clients with coding and billing issues. It's not a full-time consulting. She does both. More and more coding and billing and less audit, but still even late in her career as a graduate transition. That's a good question. I don't know, Rand, do you have any other? Rand spent 7 years at EY doing audit work before he kind of got into consulting over at BKD.
For me, I'd like to tell you that I ended up where I am by some grand design. And actually, I don't know if any of you heard of the Grateful Dead band. They have a song, and one of the lines is "What a long, strange trip it's been," and that was kind of how I ended up doing this. I started as an auditor. Ultimately, I had kind of decided I'd had enough fun auditing and was looking around for what it was that I wanted to do. And it happened almost by luck or by chance, hooking up with a couple of other former E&Yers. One of them had a niche litigation consulting firm, and they kind of described what they did, and I thought it sounded interesting, and that was kind of how I got started in forensics and litigation and fraud. So
I better not do it, right?
Okay. Well, I think I could actually, at this point, my sister was a long-time undercover narcotics agent in Nebraska, and between the two of us, we have decided that if we wanted to go bad, that we could probably make a lot of money. Even better than actually doing it is I think we should teach people how to do it. So that way we're not actually culpable, but we'll charge them a fee and we'll teach them how to commit fraud.
So, at this point, Rand's going to give a couple examples on what computer forensics, the fraud, the data mining, the really cool stuff that he and his department work on.
I see some familiar faces from this morning, the presentation that I did. And if you heard me talk this morning, you remember that I'm a big kind of trivia buff. So here's the trivia question for the day. Which of the constitutional amendments prohibits cruel and unusual punishment? And I ask that because having to hear me twice in one day present, I think, qualifies as cruel and unusual punishment. So I will apologize in advance. But wanted to talk about, and I do have the opportunity when I introduce myself to people, at one point I'd say, I'm a CPA, so I get asked tax questions. Typically, I was doing my tax return, what would you do with this? And I had to laugh always because I do one tax return a year and it's mine, and I do it badly. So for anybody to ask advice from me on tax issues is always entertaining. But now I get to introduce myself and say, I am the CSI of the accounting world, and doesn't that sound much more glamorous? It does. Does it sound glamorous though? Here I'll give you an example. I did actually spend a summer when I was with E&Y, still on the audit side. There was a penny stock company that was downtown that went out of business. And so literally one day we go marching, a bunch of first-year staff, go marching up the stairs, catch the elevator, go into the office, and it was literally, it was abandoned. It was like there was a tornado that had happened. There are files everywhere on the floors. There are desks that people had yanked out the drawers. So there's stuff literally everywhere. So we were boxing documents up, and then our marching orders for an entire summer was look at documents and flag anything that looks important. Isn't that a great description? We literally spent an entire summer going through box after box after box of documents, looking for stuff that was important. So that's how glamorous this can be. But I do think it's interesting because when we start talking about fraud and the frauds that we investigate, can anybody tell me a business anymore that isn't computerized in some way? I'm trying to think of them. Anybody? Anybody here work for a place that isn't computerized somehow? I'm not even sure exactly how you run a business without computers these days. I mean, you have an abacus and you have little beads, and you guys know what an abacus is, I probably should. I don't know how it would be done. So whenever we have a fraud investigation, there is going to be an element of, we call it computer forensics. A lot of times this is data recovery. We've got hardware, we've got computers that have been wiped out, that have been damaged, data is missing, and can we recover information from it? And not to scare anybody here own a smartphone? A smartphone is a little portable computer. And you might be shocked to know what kinds of information are maintained on that little portable computer that you walk around with. And actually a lot of our computer forensics, our computer labs, a lot of their data recovery efforts these days are off of smartphones, iPhone, whatever it is, that's where they're getting information. And then once we have the information, data mining is really taking some really powerful analytics. I'm mentioning that ACL is being used. ACL is actually scary powerful if you really know how to use it. And we've got some of our analysts that have programmed custom scripts in ACL for some of our data mining. And really what data mining is just looking at a massive amount of information all at once. So instead of saying, hey, you had 10,000 disbursements last year, we're going to pull a sample of 100 of them and review them. Forget that. A much better and effective way of looking for fraud and looking for indications of fraud is to say you had 10,000 transactions last year. Perfect. Give me a dump of all of them. Because what I'm going to do is run some scripts. I'm going to look at comparisons against your employees. I'm going to look at addresses. I'm going to look at phone numbers. I'm going to look at unique identifying information in the transactions, and then take 50 or 100 different analytics and run them, and then kind of match them together and say, okay, here out of that 10,000 transactions, here is 100 where we found 20 different indications of fraud. Doesn't mean it is a fraudulent transaction, but those are the types of things we're going to be paying a whole lot more attention to than this other population of stuff. And I've got a couple of examples of some of the patterns that we look for. Yeah?
Sorry, with the data mining part, is that something that you do before you go and like complete your audit, or is it kind of simultaneously with it?
Rob could probably answer some of the areas that we're using.
Really both. We use data mining in the audit process. Some of the tools here we will use on some audits. One of the tools that we've had, I think is really cool. I think it was the GPS deals that on here later. Is we have a data bank, or software I should say, that you can give 2 different addresses and say, so take all the vendors' addresses, all the employees' addresses, and say, give me any addresses which are within 200 yards of each other. Now, that's pretty easy to do if we're on the same street, 901 Main, 902 Main. What if Main intersects Allen? So we have a GPS, and we'll run that at certain clients as part of our unpredictability audit procedures to see if fraud's going on. So we don't do all of what he does in a regular financial statement audit, but we will incorporate certain procedures that they'll do in a fraud type audit in a regular financial statement audit. Does that answer your question?
Yeah, thank you.
And just as a couple of examples, and we'll look at the geocoding. One of the trends we'll look at frequently if we're looking at vendors and transactions is this is called an acceleration pattern. And what this is, virtually every major fraud I've been involved in that I've been involved in the investigation has followed this pattern. Because frequently what will happen is you've got somebody who's perpetrating a fraud, does one transaction, and honestly this may even be accidental. They didn't realize they were doing that, they processed something incorrectly. Nobody ever comes and asks them about it, so they say, I got away with this once, I'm going to float another test transaction out there. Here it happens again. So I still kind of have plausible denial. Somebody comes in and asks me at this point, oh, hey, I didn't realize I wasn't supposed to be processing this stuff this way. I didn't realize I wasn't supposed to be taking cash out of my teller drawer and putting it in my pocket. I'm really sorry. And the longer it goes on and the longer nobody's asking them about it, they get greedier and greedier. They think they have become the smartest person in the room and nobody's going to catch them. More and more transactions, bigger and bigger dollar amounts. So what if we can take your entire population of vendors, regardless of how many there are, and we do this type of testing for entire cities. We've done it for the city and county of Denver. And say, do we see vendors that follow this pattern? And if we see this pattern, we're going to be looking much more closely at that to see, is it something that's explainable? If you've got, say, a major capital improvement project, you're building a building, it would actually kind of follow that pattern as well. So there may be a legitimate reason that it's doing this, but we sure want to be taking a closer look at these folks. Rob touched.
I'll run the slides for you.
Oh, okay. So you could tell who's important in the room, because when Rob was talking, I'm working and when it's my turn, I'm doing this is what Rob was describing. Let's say we want to look at relationships between vendors and employees and just concentrations. So where we have vendors, living close to our employees, we just want to know that those relationships exist. So here we have a company headquartered in Los Angeles, a satellite office in San Diego. So we have taken all of their addresses, we have converted those addresses to GPS coordinates, and we've thrown them on a map. And what's even cooler, actually, is anybody here played with Google Earth? I Google Earth, not that I would ever waste my employer's time and just mess around on the internet. Google Earth is really cool. And it's really cool when you do this kind of stuff on it. We're going to plot stuff on the map and say, are there any relationships here that kind of jump out at us? And for anybody that didn't hear me this morning, is there anything on here that kind of strikes you as odd?
Yeah.
What's that?
All the way out there.
What's out there on 78?
Exactly. What is that? We have a vendor and we have a employee. sitting out here in the middle of nowhere. So would it concern you to find out that that vendor actually happens to be a casino? It was set up as a vendor at one point, and this little employee out here now is running all their gambling debt through that vendor because nobody thought to close it out. And that is actually what that was. But just looking at kind of a phone book of addresses, you would never know this relationship existed. I mean, and literally in what, 15, 20 seconds, just looking at it plotted like this, you know that there is an issue because we have a relationship that we're not expecting.
You said the vendor had like a Christmas party or something there.
Mm-hmm. Yeah.
This is a real life example. So it was a valid vendor at one point, and then when the things in payable, once you set up a vendor, if you're done using them, it needs to be off the vendor list. That's one thing we encourage clients to cleanse the vendor list. Because this happens real easy.
We have the next one. And this is exactly what Rob was describing. Say, here we have two different street names, so you might not realize that these houses are catty-corner from each other. And, the reality is they are right next to each other. We got an AP manager, and does anybody see a problem with Vinny's Salvage Yard? That's looking pretty, and this is why I love Google Earth when you plot some of this stuff. Vinny's Salvage Yard sure looks like it's in a residential area.
Yeah.
And I'm not seeing a bunch of trucks and cars and stuff. It looks like a house to me. So we have a salvage yard that is really a residential home. And by the way, it's a block away from our AP manager. As an organization, do you want to know about this relationship between these folks? I would say absolutely. And again, just looking at the addresses, you would never know this existed. I mean, unless you were really familiar and you realized what those streets were. That's kind of structured data that we look at. When I say structured, I mean information that's going through the accounting system of a company, looking at emails, looking at transactions. But what I want to share is talking about the growth of big or unstructured data. I think this is a remarkable comment. That every 2 years we are creating as much information as was created from basically the dawn of civilization to 2003.
Your slide said 2 days at 2 years.
What's that?
2
It
days.
says 2 days, it's supposed to be 2 years.
Oh, I'm sorry, 2 days.
Yeah.
And can anybody tell me how big an exabyte of data is?
1,000 terabytes.
It's actually 1 million. 1 million terabytes of data every 2 days. Go ahead and flip to the next. And this is what it looks like. Here's kind of regular transactions, structured information that we run a lot of our data analytics on in a company. But here is the massive amount of unstructured information. And I don't remember the numbers anymore, but I know I have seen how many tweets there are through Twitter a day and kind of the exponential growth in that. The amount of video that is uploaded to YouTube every day, it is truly mind-boggling how much information there is. And if there is a fraud being perpetrated, we have looked here a lot traditionally, but here is where more and more of this information and more and more of the problems are existing in relationships that we need to be identifying. So what kind of tools do we have to look at those? I should flip to the next. And one of the examples that I like to use, and I have seen this run live, is let's say Rob and I are committing a fraud together. In this case, we work for the same organization, so that's one relationship that exists between us. But he's in a different position than I am. We have, say, a different social circle that we're in. Other than the fact that we work for the same company, if you were investigating us, you might not see a whole lot of really anything that connected the two of us. But what else do we have these days? Well, we've got LinkedIn, we've got Facebook, we've got Twitter. So what if I can go to Rob's, you on Facebook?
Yeah, Facebook, maybe either one.
Okay, he's on Facebook. I think you're on LinkedIn too, aren't you? Let's say if I can take my little spider bot, my little piece of programming, and say, we're going to start it on Rob McCoy in LinkedIn. And that little spider bot, and you go to the next. Okay, these are actual, plotted, individuals in social media. So we'll use LinkedIn as an example. So our little spider goes into Rob McCoy and it starts saying, okay, who is Rob McCoy directly linked to? And it goes out and it starts doing these patterns, starts branching out, and then it'll say, okay, once it's got the connections the people Rob's directly connected to, who are they connected to? Then who are they connected to? then who are they connected to the point we start seeing these types of relationships, saying, here we've got Rand and Rob, and here is the network of people and connections that links them together. And if we're trying to establish those connections, now guess who are the people we're going to start looking more closely at? The folks that fall into these circles. And like I said, I saw some of these tools presented live, and the woman literally, she used her own Facebook account, threw it up, and we watched on the screen as the little spider was going out doing these connections. So is anybody here on LinkedIn, Facebook? Do you find this disturbing at all? I do. This is one of the reasons I'm not on Facebook. But some really some pretty powerful tools to help us identify, and it's about identifying relationships for this type of information, that identifying how things are linked to help establish areas that we didn't realize there was a connection to help highlight them. And that was a really fast over. Anybody have questions on that? Okay.
One of the other cool tools I think our friendly people do, they have a database of all the mailbox, et cetera, UPS type boxes. In many small companies, that is a mailing address. When you're committing fraud, you may not be like the salvage yard and use your home address. You may go get a PO box somewhere. And so they will go through a vendor list and pull out any vendors who have a PO box that may be legitimate, but the higher probability of fraud occur when people have a PO box as an address, and they'll actually go out to the internet and say, does it actually have a mailing address? If it doesn't, it's just a PO box, all you see out there. It's once again a higher risk of fraud. It may be legitimate, but it's a higher risk. Just like some people have a higher risk of skin cancer. If you like to get in the sun, you should get tested more. Just kind of the same logic comes to fraud. These are people, these are organizations that just have a PO box with one unusual. Let's pick a sample, and particularly ones, if you have over $100,000, your company just has a PO box, that's probably a red flag. IT services, in addition to what Rand has, a lot of companies, Alan and I were talking today about ACM, a good firm, I know, they actually do accounting, bookkeeping services on the cloud for more and more clients. That's an initiative driven in their IT department. Within BKD, we have some partners who do IT system selections. We are a licensed Microsoft reseller. We have a partner and programmers actually based in Denver. He's been in Indianapolis, moved out here, he's now hired 5 programmers, and they install software. In many cases, in most cases, are non-clients because just the nature of independence issues and stuff, we kind of watch that. But we have a subsidiary that does system selection, system installation, programming support, testing, and like I said, I mentioned Greg got ACM, and I do some hosting on the cloud and stuff for companies. So in our IT consulting, we only have two divisions. One actually sells the software, the other one does the IT controls and stuff. We have kind of 2 separate departments and subsidiaries, if you will. Next. Work we do, now we talk about what we do, and you see BKD still 49% insurance. My guess is Deloitte's. My guess is probably 50%, a little bit more. Okay. Big Four, my guess would be, I don't know, I haven't looked lately, probably similar insurance, maybe a little less tax, a little more consulting. Different firms will differ, but I think it's a fairly typical percentage. Now this debates how you code your timesheet. I talked an example of transfer pricing, is that tax service, is that consulting? Depends how in our firm, what code you use. So it could be a little misleading on how firms charge stuff. I think a lot of larger firms are in this mix. A lot of the general business consulting probably still shows up in insurance. You're doing the audit, and you spend an hour or two talking to the business owner. This general business consulting, you probably don't pull out separately and bill it separately in some cases. So, but most CPA firms, I think, are very similar to this mix. Just to give you an idea what kind of industries BKD works for. This is nationwide. It's different types of industries we work with. As you can see, healthcare is our biggest industry that we work with manufacturing and distribution being the second largest. And if you go to the last slide, wait for that to go back and go to the last slide. Well, you didn't put our contact information.
I didn't put our contact.
Good, I was interviewing today. I put our contact information in. We passed around a lot of marketing stuff. Has anybody looked at that and have any questions? Some interesting stuff you didn't know what it was. Hopefully I do. If you have questions, if not, I'll make it up. Any questions about consulting or what TPA
You asked about, how to get started in consulting. Any other questions? Yes?
So when you're doing an audit and you do come across any fraud or anything, as an auditor, do you address the fraud to yourself, or do you go into the forensic accounting department and have them look into it?
In most cases, we'll get the forensic people involved early on. It depends if it's a fraud, like they sold I think I've never actually had this happen, but they sold some assets to a related party way below fair value. We sold a building for $1 and worth $1 million. It's a one-time transaction. I probably don't get forensic involved then. But if I have concern that a typical fraud, and most fraud happens due to kiting of revenue, you have unusual checks coming in, some stuff pops up on the AR confirmation, but a lot of customers said they paid it. They came in January, what happened there, or the most common fraud, a lot of times small with dollars, is on the vendors. It's really scary how people put up a vendor, leave it in the system, and then don't take it out, and how many people have access to even change the address. Going back to be a valid vendor, but the company went out of business, some AP clerk just goes and changes the address to their home address and puts it in. I joke, I think a lot of examples of nickel and dime stuff, lawn care. No big company knows who does a lawn and does landscaping. So it seems like a lot of fraud happens where it's like RDM landscaping, and if somebody gets a bill, it looks reasonable, a couple $100, pays it all the time, and never had it done. I worked for a private company for a year, and they intentionally did that, along with their kind of peer group. They're in the auto truck type industry, and they had what's called a group of 20. They benchmarked with each other and stuff. And they said, let's all send bogus invoices in. This is 20 years ago, so hopefully technology is better now. And I think out of 20 they sent in, 17 got paid just by sending bogus invoices in and made it look legitimate. So on the payable side, it's really scary how easy fraud can occur.
Well,
But
the example that Rob just gave, and we talked about it this morning, but the city of Dixon, Illinois, for all practical purposes, was a great big straw vendor scheme, a fictitious vendor, and it was a $53 million fraud. So it's not always small things. I mean, there's some huge frauds, and a lot of the things we have been investigating have involved fictitious vendors.
that was a 15% of the city's revenue in the last 15 years. Any organization loses 15% of their revenue over a 15-year, give or take, period, and no one noticed it. It's just amazing. Hindsight's always 20/20, but it's interesting. There'll be a case that goes 30. It'll be in the textbooks in a year or two. It's a very interesting case. Any questions about healthcare, banking, certain industry consulting?
I am kind of curious to see what sort of things are changing for you now that the Affordable Care Act is kind of kicking in. How does that change your business or the questions that your clients are asking?
I don't work a lot in healthcare, but just from a high level, just a partner meeting and stuff we're seeing. On our client side, because healthcare is our biggest industry, I think you'll see a lot of consolidation going on in healthcare. Here in Colorado, you're seeing University Hospital, Cedar Valley Systems, Memorial down in Colorado Springs become a system hospital. There's some reimbursement issues, which better be independent hospitals are going to be harder to sustain, is my understanding. So I think you'll see a lot of affiliation and consolidation in the hospital area. I'm not as versed as I like to be on the actual exchange and the rates and benefits that companies may or may not offer employees now. I do know there's some companies who talked about saying, I'm just not going to offer any more than this paid fine because it's cheaper. I think that's probably more valid in a demographic, maybe an older population, if I understand it correctly. Because in order to make the exchanges work, they have to have people like you guys buy the insurance because you guys are pretty cheap at your age. CPA firms, if you know anything about CPA firms, if you look at our demographics versus an industrial company, we probably tend to have younger employees. A lot of people start off in public accounting and eventually go somewhere else. It's very common. We have some consultants and long-life employees who aren't partners, but it's kind of a pyramid age-wise. So if you look at our insurance cost per person, probably less than other people. So internally, we haven't had we're going to keep our policy as is, as far as I know. So, I actually wish I was more versed in that area. But from the business side, I think you'll see more consolidation. The Poudre University Memorial was a big transaction. And then I think it has been announced that I've actually been helping some of the county, National Jewish, and some of the St. Joe Hospital working with affiliation. And some of that's driven by the reimbursement bills with Affordable Care Act. Any other questions? Yes?
On the forensic side, how busy are you usually? Do you have a lot of downtime until something comes up, or are you consistently busy?
What I tell folks is actually if you took the total hours, I think the tax, correct me if I'm wrong, I think if you took tax, audit, and consulting in our firm, the tax people would be a little bit above the auditors as far as total hours
Yeah,
over the
maybe,
year. A little bit. And then the amount of hours that we work on the forensic side is about the same as the auditing folks. Our timing is different. My March, April isn't necessarily my busiest time of the year. Some of that is project driven. You know, I was really busy over the summer, and it's actually the second summer in a row that I've done it, where a lot of our traditional services aren't very busy. So the amount of hours that I work is about the same, the timing looks different. Usually summer quiets down a little bit, fall gets busy again. I do litigation and expert witness work as well. People tend to not like to sue each other during the summer when their kids are on vacation, because then, you know, having to go to court messes up your vacation plans. So usually then the fall will pick back up. Year end becomes really, you know, right before year end becomes busy. But so it depends.
And I think at a high level, when you see downturns in the economy, I think there's about probably a 2 to 3 year lag. You uncover the fraud that happens when people have personal financial issues. So I think we're seeing, my guess is we're seeing some of the effects of downturn 2 or 3, 4 years ago. People started committing fraud. That little graph that Rand showed, sometimes those experimental ones, maybe a month or 2, 3, 6 months apart. But, you know, spouse lost their job, you're okay for a couple months, you can't make a house payment, so you embezzle a couple $100, and then you have to take your kids on vacation, so you embezzle $1,000, and then all of a sudden you realize no one's questioning you, and that ramps up. Sometimes it's a delay from an economy is bad, the fraud happens then, it starts happening then, but it's uncovered 2 or 3 years later. That,
Yeah.
at a high level, I think he'll be busy the next couple of years.
Well, when you think about it, you know, during the economic downturn, what were companies doing? They were laying a lot of people off. So from a control structure standpoint, you know, your segregation of duties is being impacted. A lot of the controls have been weakened because you just don't have the people anymore. And while you're weakening the internal controls of your organization, they're having more and more financial pressure. So, you know, it's kind of a perfect storm of you're loosening controls at the time that it's really being most dangerous that people, you know, may have incentive to commit fraud. And Rob's right. You know, I think we have seen kind of the tip of that iceberg starting to show up.
Questions? Well, thank you for your time. We'll hang around for a while if anyone wants to ask a question offline. I wish all of you best of luck interviewing. I have a passion for our profession. We have a motto inside our firm that says, do what's best for the firm first, your office next, and you last. I added something on top of that, do what's best for your profession first. I'm a strong believer as a CPA profession, if we lower our standards of profession, we all have to suffer the consequences. So I wish you best of luck interviewing. Obviously, I'm not going to hire 20 or 34 people from UNC, but there are a lot of great firms in Colorado or other places, and I wish you all the best of luck. Thank you. You know, books back. You need the hardback books, the other stuff, you can look at. That's your party game this weekend.
Hi, I just wanted to introduce myself. I'm Shelby. I'm going to be interviewing you guys next week.
Yeah.
I met Aaron at the firms, and he was a firecracker.
Yeah, he is. He was actually here today as a greeter. Don't know if he'll be back next week. We both have a staff person now.
Yeah, I like those people.
Yeah, those old, stuffy old partners. Kimberly's great. She's actually one of them.
Healthcare, he's actually the AICPA chair. So, you have any interest in healthcare?
Well, I used to be a nursing major, and I didn't realize you guys were so big into healthcare. I've been asking all the firms, I was like, how are you involved in healthcare? And I didn't realize it was you.
Nice to meet you. So I interviewed you with Ron this morning, and I think you mentioned that you had a tie-in with Craft Candy.
Bring that up.
We actually have how many people.
Okay. Oh, is she? How exciting, because I spent 2 years out there at the JUCO. I was offered a softball scholarship out
Multiple
there.
people like that.
Yeah.
He was telling me about
Weird
someone
that
had
we're like,
a connection with
nursing to
Kansas.
accounting, that's like a fun thing.
We have two healthcare partners.
I thought that was kind of crazy.
And
Right? Have you been out in the Kansas area already?
I have done some
Work a couple years back, and we started off in and got a situation healthcare.
Yeah.
Yes.
So I have been, actually, I have done that they had.
Did you want to partner on it? You want to hire me? They're a key partner. I was not a part of the Kansas City you suggested, and so I couldn't.
So what other states have you been to?
Well, thank you so much. It was nice meeting you. Thanks for coming tonight.
Rob Cameron Myers. I not interviewing you. I have been to but I just want to say, I love it. So I spent 3 months. I mean, I was here all last year, listening to all the same things that you were out there with everybody else. And you had one CPA that comes across as someone who loves it every single day. I love your team. Even when you're up here, I mean, this enthusiasm. Come on. I mean, you're up there like, well, I got another presentation. Craig, how many times have I done this?
So you don't like the friendly side, you do quite a bit of travel?
It depends. You know, a lot of, actually, as in fundraisers, so when I travel, it kind of might be a trip.
Sure, yeah. Well, you know, it's interesting, one of the motivations to get into CPA profession, even though I want to work for smaller is to get that reputation back. So we have that reputation of integrity, honesty, and you're somebody out there you can trust. Okay, and here's what they did. Because they're just not going to cross that line. They're not going to do anything unethical or illegal. And they don't care who their client is. They don't care if you win
Actually, what
$2
happens
a year.
more often is I do a
No,
lot of
it's not going to happen. And I think with the size stuff that happened with automation 2000, a couple years later, we just they don't remember it at all. But yeah, I remember that it was a complete mistrust.
Have you gone to like any court cases?
And of course, in my opinion, it led right into this next
Oh,
one.
okay. So would you just
Banks
have
are a
to
lot
like,
clearly,
this is what I
just they should not have
found?
been buying, I don't know what their motivation was.
Testifying is incredibly different process. I mean, what you described as far as examinations of where I'm
It's a big deal.
trying to break you down. You're a horrible professional, you've been all professional standards, you're an awful person, you just all.
My mother said you can't say anything, just say nothing at all.
I say the second was the first thing is to be shot.
Well, actually, what I'm doing right now is I'm working part-time down to
It's gotten better since then.
resigned, and so I do just simple stuff, reconciliations, commissions, that sort of thing. But there's a couple of people I know that one has their own firm, has had it for about 5 years now, she's an independent. But she's at that point where she's gonna be growing.
Yeah, usually.
She works a lot of areas. She works a lot of proprietors, small family businesses, LLCs, and that honestly is what I spend my life doing. I wouldn't pretend to do it. So I understand that business stuff right there, and I want to take that and move that.
So would an auditor have to like come in or anything, maybe involved in having this kind of?
Probably do, but we can't afford broadcast. So let's get your revenues up high enough where you can't afford one. And improve even more. But in the meantime, for a small cost, I can help you.
Clients.
Huge market for that service out there today. I think the recession which I've seen in a lot of and I look back at the big picture of people who are 50 now.
I've been